Prime Minister Tun Dr Mahathir Mohamad has confirmed that the government will not be selling Highway Concessionaire Plus Malaysia, but says that the operator would have to reduce toll rates. As such, Plus will remain with Khazanah Nasional and the EPF. Mahathir says that it was the best decision after considering the views from many quarters, including the Cabinet, Bernama reports. He explains that after studying all the bids made by the private sector and by Khazanah, keeping it with the original owners was the best option. As such, toll rates would have to come down by 18% starting this year, but the PM did not offer any details as to exactly when. Think tank Ideas threw its support behind the government's decision not to sell, as it would put a stop to speculation surrounding the highway operator. Furthermore, Ideas feels that a sale of any government-linked asset should be done in an open and transparent manner, following a proper framework. Finance Minister Lim Guan Eng says the Malaysian public spent over 10 million ringgit during the first day of its e-Tunai Rakyat initiative. Bernama quotes Lim as saying that as at 10 p.m. last night, all three of the service providers had approved 320,000 out of the 380,000 applicants. To recap, the three e-wallet providers that had been chosen for the initiative were Boost, GrabPay and Touch and Go e-wallet, while the program itself is managed by sovereign wealth fund Khazanah Nasional. Lim explains that encouraging cashless transactions would prove an important step towards transparency and accountability, as it would help in the fight against corruption. The government is also prepared to top up their allocation for the initiative if the 450 million ringgit funding has been used up. Under the program, it is expected that about 15 million Malaysians are eligible to claim the 30 ringgit under the initiative, which started yesterday and will run until March 14th. Primaries Industry Minister Teresa Kok says Malaysia will continue to engage with the Indian government in order to resolve concerns over New Delhi's new palm oil import restrictions. This comes amid confusion after India's Commerce Minister Piyush Goyal was quoted as saying that not only had they not imposed any curbs on imports from Malaysia and Turkey, but that they were not even contemplating any restrictions. News reports said that the tension between India's Hindu nationalist government repeatedly objecting to PM Tun Dr Mahathir Mohamad speaking out against recent policies which critics say discriminate against Muslims had led to restrictions on imports. Meanwhile, the Malaysian Palm Oil Board says it will have to study the impact of Phase 1 of the US-China trade deal signed yesterday because it will have ripples on Malaysia's palm oil sales. Under the agreement, one of the pledges Beijing made to Washington was to more than double its purchases from American farmers in the first year, and among the products China has promised to buy more of were soybeans. MPOB official Balu Nambiapan says Malaysia's palm oil industry, which earlier benefited from the initial stages of the US-China trade war, will now have to look for ways to move forward, given that China is a price-sensitive market. Baraka Offshore Petroleum has served up a statutory notice against its client Petronas Carigali to claim 477,476 ringgit and 37 sen in relation to a contract issued in 2016. The contract is related to the provision of underwater services for Petronas Carigali by Baraka's wholly owned unit PBJV Group, which had received the letter of award on August 2nd, 2016. According to the announcement, some 118,193 ringgit and 52 sen has remained outstanding despite the fact that Petronas Carigali has issued the procedural confirmation and acknowledgement to pay the said sum. As such, Petronas Carigali has been given 21 days from the receipt of the statutory notice to fully settle the sum, failing which it would be deemed unable to pay the debt and action will be taken to wind up the company. This is not the first time that Baraka has gone up against Petronas Carigali. In 2019, Baraka had filed a 1.02 billion ringgit demand against the Petronas unit after it had issued a 3-year suspension on Baraka's license, which it argued was unwarranted. DataSonic Group has received a letter of extension to supply 6.1 million raw MyCards and MyCard consumables to the National Registration Department. According to the BOSS filing, the LOE is for 1 year, from January 1st, 2020 to December 31st, 2020. In May 2016, DataSonic had bagged a 3.5-year contract worth 260.4 million ringgit for the supply of 12 million raw MyCard and MyCard consumables to NRD from July 1st, 2016 to December 31st, 2019. According to DataSonic, due to the much better quality of the new MyCard raw cards and chips, there were much lower replacement of faulty chips and peel-off of MyCards. As a result, during the original contract period, NRD only ordered 5.9 million or 49.17% of the 12 million units of MyCard raw cards, with huge savings to the government, according to DataSonic. The company said the contract is expected to contribute positively towards its earnings for FY20 and other financial years during the duration of the contract. DataSonic's share price initially reacted positively to the news, trading to a 4-year high of 1 ringgit 64 in mid-afternoon. However, it was unable to hold on to its gains and closed the day a cent lower at 1 ringgit 58.